Okay, ma'am. Let's start. So, hello everyone. Welcome to R&A Knowledge Series 2026. My name is Sandeep and I will be moderating today's session. So, as many of you are aware that R&A is celebrating 30 years this year, and as a part of this milestone, we have planned a series of webinars on various topics. So, today's session is 8th webinar and the topic is financial literacy, from earning to securing your future. So today's context is somewhat non-core, but we felt that it's very critical topic, which is equally important for every professional. So we have chose this topic, and we are. Uh, it's my privilege to welcome Mr. Smit Shah.
Thank you. Thank you so much.
Yeah, I'll quickly introduce Smit Shah. Smit Shah, a seasoned professional, financial professional with over a decade of experience in the financial market. So he has cleared all three levels of CFA, that is Chartered Financial Analyst program, and holds a bachelor degree in financial markets. So his expertise spans across equity and the credit markets. He specializes in financial planning, particularly in mutual fund space, with a focus on goal-based investing. He's also a founder of Money Mentors, a boutique investment firm that provides tailored investment solution to individuals, corporates, HNIs, and NRIs. We are glad to have you, sir, today.
So much pleasure.
So, before initiating this session, I would like to tell our members that this will be divided into three steps, three sections. One is financial, how to do a financial planning, then how to secure it, and there are some tools and tips and tricks where we can use for better financial planning and structure. So, Smith, sir, before handing over to you, my question is, how should an individual approach financial planning in a structured and a goal-oriented manner? Because I believe that most of the professionals here are earning and investing, but are they investing in a goal-based? What should be the portfolio for a stock market or a real estate or other areas? So, is there is any particular structure or a percentage wise that you need to invest this much, and you need to set a goal for each and in your life?
Right.
What is
Yeah. So a very a good question and a very relevant one. We all are investing. We all are saving. There are n number of products. Thanks to technology, we have easy access to a lot of stuff. I would not want to give you percentages or numbers of asset allocation because it's very dynamic and it depends on case to case basis. But one thing which I would like to add or which we want to for sure discuss is we need to have goals. We need to know where we want to go. So Sandeep ji, if I can ask, if you head towards your office, how do you travel?
by my vehicle, sometimes car, sometimes
Perfect. So let's assume car for now. Okay. Now, once you're out of your society, where do you go?
I go to my parking lot,
Okay.
then get on the road, and I have a usual route to my office.
Right. So
Yeah.
first, after getting out of your society or building, you take a left or a right?
I take a left.
Left. Okay. So, okay, not to complicate much, but what I'm trying to prove is you know that you have to travel from your residence to your office. You have the map or the location, and hence you know whether you have to take a left or a right and so on, right? So, what I'm trying to say is you know where you have to go.
Right.
Now, the problem in investing is everyone starts investing saying, okay, I have a capacity of start investing 30,000. For some, it will be 50,000. For some, it can be 5,000, 10,000, depending on case to case basis. But the why is the why clear? Why am I investing? Right? So now, can I share my screen?
Yes.
Yeah, I have requested Sandeep.
Yeah. I have allowed.
Perfect. Okay. So let me know if you can, see the screen. Is the Excel file visible?
Not yet. It says you started screen sharing. but it's visible now.
Perfect. So now I'm trying to be as candid and as raw as possible. So this is a case study of one of my client. Okay.
Hmm.
Now she has started investing with us. Don't look at the numbers for now.
Okay.
Okay. When we started investing in 2024, 20th March to be very precise. Okay. Now I asked her, what do you want to achieve from your investments? Okay. So it's a family of three, husband, wife, and a daughter. Her daughter's name is Savi. I've changed it for confidential or whatever you want to define. So let's assume her name is Savi. Okay. Now the first goal she says is Savi's education. Okay.
Hmm.
Now at that time when we onboarded, she was 2.5 years old. I'm assuming right now she's 4.5 years old. So higher education starts after the age of 17, right? In
Right.
India, we conclude our 12th standard at the age of
17,
17,
18. Hmm.
right? So that is one goal. So the tenure is 14 years. Then she says Savi's marriage, assuming she gets married at 27, 28, 25 years. Then she has a home loan. So we decided, okay, we'll get rid of that home loan as well. Then she has some personal goals, brother-in-law's marriage after 5 years, holiday travel after a year, Savi's education every year, emergency funds, retirement, and so on. Okay. Now, all these numbers have some logic,
Hmm.
except for marriage, because marriage, we don't know at that time, whether it will be a live-in court marriage. We are moving towards the Western culture. So I don't know the number. So 1 CR looks, sounds good to hear. So 1 CR. But rest of the numbers, I have logic. I'm not going into that logic for now. Now the idea is if I have all my goals, the your goals can be anything. One of the goals which I have is I belong to a Hindu family, Gujarati family. In our traditions, mama has to contribute during niece ka wedding as a
Right.
gift or gesture or whatever it is, right? That is one goal. Why I'm giving this weird example, any future outflows can be goals,
Right.
right? Once you have these goals in mind, okay, once you have the amount required, once you have the tenure defined, based on the tenure, the question which you asked, which asset to pick, real estate, gold, shares, mutual funds, and so on, based on the tenure, we'll try to select the product, right?
Right.
And based on the product, I know what returns I can expect. Now, if I have amount, tenure, and returns, can I help myself to calculate the monthly contributions required?
Yes,
Right?
definitely. Yes.
Once I have those monthly contributions, now in this case, I know I should contribute 1 lakh rupees to achieve all my dreams. Okay. Can you invest it or can you save that much is not important.
Hmm.
This gives you clarity. और in Hindi I say हम कितना पानी में है वो समझ में आता है इससे, right? It
Hmm.
gives me some clarity. Why do we have goals in our business? Or
Hmm.
every employee might have some targets and goals, right?
Right.
Why? So that I know where I have to reach and how much time I have. And basis the amounts, if you see on the very right hand side, I have mentioned something in PNS.
Hmm.
Those are nothing but my primary and secondary goals,
Hmm.
right? Then I define myself, okay, I can't invest 1 lakh right now. No worries. What are my primary goals? In primary, what are my first and second priority?
Hmm.
And once I reach those levels, I start investing. If I have to compromise something, I first compromise my secondary goals and then the primary ones,
Okay.
right? So what I'm trying to conclude is this gives me some basic clarity. Now, Sandeep ji, the problem is only 5% or rather 95% of the investors or savers don't have this plan.
Hmm.
And as I said, if you don't know you have to reach office, you take a left or right. Likewise, if you don't have a plan, is 20,000 enough? Is 40,000 enough? Is 5,000 enough? How do you justify that?
Hmm. So setting up the goal is must. That should be our
Yes.
primary focus.
Yes, absolutely.
Okay.
I hope that helps,
And what about the structure? Means you first understand what is the what are your goals, right? Throughout your lifetime, whether it's a retirement or whether taking a
You pen
home
down
or
everything. You pen
Yeah.
down everything. Whatever your aspirations are,
Right.
it can be
Right.
buying bike for someone, it will be buying a car for someone. And I'm not here to judge anyone. Okay. Someone might say,
Mm.
I want to buy a Ferrari. Fair enough.
Right.
Uh, Nothing is right or wrong in finance. Whatever suits you is right. But having a plan is a must. Pen down each and every goal. Like I will just give you one more example of mine. After retirement, I want to work towards the unprivileged section from sports perspective.
Mm.
Okay. At 51, my target zone is 45 to 50 at financial freedom or retirement, what you say, right? At 51, will someone hire me in a sports organization so that I can help the underprivileged? Probably not, because I have a finance
No.
background. I don't have that sports background.
Right.
So then I will have to start something of my own.
Right.
I need some funds to start a sports club.
Right.
Example, I need 10 crores or 5 crores to start a sports club at the age of 51. I'm just trying
Right.
to give you examples. Goals can be anything,
Mm.
right? Whatever your interests, whatever your aspirations, whatever you wish to achieve is your goal. Any future outflow is your goal. It includes travel, education, families. It can be anything and everything.
So first step is spend on your goals. And how
Yes.
will you calculate the amount? You calculate with the inflation rate, or how does it? You generally calculate as of now.
So most of the cases we consider inflation, like in this example of Excel file which I had shown, we assumed education expenses after 14 years.
Mm.
As per the past, we consider a 10% inflation in education. As per the past, we consider 12% inflation in medical costs and 7% inflation for livelihood expenses. So obviously, we consider the past inflation numbers and then what asset class we select, what is the returns I can expect, basis which I calculate the monthly amount I should invest to reach there.
And the structure is like only equity market, only mutual funds, or do
Hmm.
you suggest any other portfolio as well?
It has to be everything. It cannot be only equity
If
portfolio.
there is any particular percentage that you need to structure, means
Hmm. It's
out of
not a
your,
percent. Yeah, it's not a
or
percent.
else your based on your salary, this much percentage should be your investment.
Uh, so generally we prefer 30% should be your savings and investment. So 30% goes toward, if it's a thumb rule, one third goes towards your expenses, one third goes towards your savings and investment, and one third goes towards your EMIs.
Okay.
If you're lucky enough not to have any EMIs, invest 50% so that there is no future situation where you end up taking a EMI, right?
Understood.
So what I was trying to share is in this example, now if you see these goals which are marked in red are all due after a year, right? An emergency, though the goal is 3 years, but I don't know, emergency will never ask me before
Right.
coming. Right?
Right.
So these are short-term goals. Now, can I invest short-term goals in equity? The answer
I
is
think
no.
yes. No. Okay.
We can't invest for short term in equity. If you're investing
Equity.
in equity, be it share market or direct stocks or mutual funds, please give at least 5 years of period.
Okay.
Right? I don't know where the next period is. 2 years back, someone started investing, will have a
Hmm.
very bad time.
I know. I know.
Someone who started investing in 2022 will have a very good time for the next 2 years. Do we know that when we start? No. Now, in hindsight, I can easily say that. Right? But in five
And
years, the assumption is there's a good cycle, there's a bad cycle, everything gets covered, and hence your horizon has to be 5 years if you want to invest in equities. Let's not go into the details of where to invest,
right.
but where I was trying to show you is because the goals are short term, the asset class will depend again on the tenure. Your tenure decides your asset class. If someone has all the goals which are long term in nature, maybe he has a 100% portfolio in equity.
Understood.
Right? Yeah.
So since now we understood that you need to pen down your goals first, right?
Right.
And uh, till you reach that particular goal, you can stop that investment. So my question is, how what is enough? If I want to be a financially independent, what amount we can say that for a particular individual this is enough for you? for rest of your life.
Perfect. A very valid, very practical question again. In this case, okay, thankfully we have covered everything over here. Okay, so can you see the Excel file over here?
Yes, we can.
Okay, please ignore these names. Yeah, so over here, if I say, so 1,05,000 is this family's monthly expense. When? In 2024, when she was 34. I have considered how much inflation? 7%.
Okay.
I asked her, when do you want to be financially free? Now, let me correct. Financially free doesn't mean retirement. That is the age post which you work on your conditions. You don't work to take care of your house. If you want to work, you will work. If you don't want to work, you will not work. That is your choice. That is financial freedom where I have the liberty to take my decisions. Right? She says, by the age of 50, I want to be financially free.
Hmm.
What is the monthly expense by that time? 3,10,000, 3,09,977, right? Which is
Hmm.
3,10,000, assuming a 7% inflation and no change in lifestyle, right? Now, if you do some back calculations, if I generate 6%, today the FD rates are 6.5, 7%.
Right.
Now, there is some different logic to this. Let's not directly the numbers, but if I have 6 crores after 16 years, my 6 crore, if it generates 6% returns, 6% of 6 crore is 36 lakhs.
Right.
30 lakhs divided by 12 is 3 lakhs. So roughly 3 lakh is my monthly expense. So if I have 6 crores, can I say I'm financially free?
Yes, because you earn an interest on 6 crores, and that will be your monthly expenditure can be covered, and your 6 crores will be intact. That will be your safety as a.
Absolutely.
Okay.
Absolutely. So this is again only the retirement part, the taking care of my livelihood expenses. And hence we have all the other goals covered. Yeah. So that is one part of the answer to your question. And the another part is I'll move to a different screen. So what we generally do, is try to map all the goals. Now, I'm not sure how it is, but have you heard about organizations having a tracker? Say for example, someone is in sales. You need to sell 100 rupee worth of items this month.
Hmm.
And then there's a tracker. Okay, now only 10 days are left, and you have done say sales worth only 60 rupees. You need to catch up and do a 40 rupee sales in the next 10 days.
Right.
Right? Similarly, when I talk about my personal goals, I'm again mapping this to. Can you see my screen?
Yes, right. We can.
What I've done is I have again mapped these to, can you see the goals? Holiday,
Right.
education every year, emergency funds, brother-in-law's marriage. Now these are some new goals which she has added. For that, she wants to buy a car.
So this
She
is
wants.
under a portfolio. You have named the goals.
Yes, and whatever
Okay.
investments I'm doing, I have mapped those investment to those goals. So if you see, let's take example of this goal, emergency fund. My target is 5 lakhs by May 27 here on the right hand side. I'm
Okay.
investing 10,000 rupees every month for my emergency fund.
Okay.
System says, as of whatever assumptions we have, we are only reaching at 3.5 lakhs.
Okay. That projection value is also there.
Yeah. So
Ah.
you need to add 11,000 worth of investments more per month. Okay.
So you
Now,
can evaluate on a periodical basis, and you can see that whether you can reaching that goal or you are reaching that goal or not.
yes. So the idea is once you know you have achieved all your goals or you are on track to achieve all your goals, what I will say is, you know what? From now, there is no need to increase the savings. In the end, life is short. Enjoy,
Right.
right? There's no point just saving and then enjoying at 60, right? I
Right.
don't know, my health will support me at that time. So it has to be a good balance. How will you balance it? I will give you one example of this goals, okay? One of my very school or rather kindergarten friend, okay, he's my client. And once he gave me a call saying, you know what, Smith, I'm planning to buy I don't remember honestly, iPhone 15 or 16, that Max and Pro, Max Pro. I'm very bad. I have a Samsung. phone. I don't have iPhone, so I'm not good at it. But some of that phones, that comes every year, and he wants to upgrade it almost every year. So he
Mm,
said, Smith, can I withdraw 30-40,000,
mm,
right? And I shared this screenshot with him, the screenshot of the goals, right? And he says, I got it, Smith. You can directly say there is no requirement to buy a phone right now, right? Now, what he has done is he compared, are my goals important or is phone important? That time the answer was goals are important, right? Now, this case, after 6-7 months, his dad gave me a call. Smith, there's a problem. We need to redeem 30-40 lakhs from that portfolio. Why? Because in Mumbai, in one of the society where he has the office, last top floor of that office, it was a restaurant, and there was some fire over there, and the building was not following the norms from the fire safety perspective,
mm.
and they had to vacate, not vacate, but they were asked to get out of it, and they moved to a different office, and they said, we need, our business is such, we need good interiors. Okay, so they wanted 30-40 lakhs for the interiors of the new office. That guy, my friend, was just asking for 30-40,000, and his dad is asking for 30-40 lakhs. What did we do? We redeemed that 30-40 lakhs. You know why? Because when he asked himself, goals are important or office is important, right now, unfortunately or fortunately, office is
Office is
important.
important.
I can't give that answer as a financial advisor.
Right.
But once you have a plan, you can compare, right? If
Mm,
you don't have a plan, what do you compare to?
right.
Right. So I hope that helps.
That helps. That helps a lot. So you showed me some this NJ Wealth, right?
Yeah.
Likewise, this portfolio will be available for every mutual fund manager, right? In any this
Most
kind
of
of
them
section.
should have. Most of them should have. We have a lot of technology, a lot of apps as well who are doing this thing where you mark your goals, you tag your investments and do it. Uh, but yeah, most of them should have. Unfortunately, advisor distributors are not doing this. It takes a lot of time. Trust me, when I have to build this, it takes 2-3 hours of mine. And what an advisor will think is, why should I spend time here? I should spend time acquiring more clients, right?
Because why I asked you, because I also use NJ Wealth, but my advisor never told, never segregated these goals.
So
Right.
as I said, it takes a lot of time. It takes 2-3 hours of yours and mine as a client and as an advisor.
Right.
And I have to sit with you every year to keep this tracking.
Right.
If I do that, I have that much less time to acquire new clients. Again,
Right.
not going into that much, but yeah, it is there. How much of them follow is a different question.
Understood. So we understood the you need to pen down your goals, you need to structure your goals, and in case of financial independence, you gave an example that ki 1 lakh ka agar, if you have a monthly expenditure, then if you retire, if you want to financially independent, then by 50 year at the age of 50, then your corpus should be of 6 crores.
Yeah. So this was in
Yeah.
the case when the age was 34.
Right.
So she
Right.
had 16 years in hand for
Right.
retirement. Yeah.
Right. Right. So we'll move on to the next segment. Financial planning, you covered very well. The next
Yeah.
segment is with respect to insurance and policies. And I believe most of the professionals who are attending this webinar, everybody will be having a, a medical policy or an insurance or a term insurance. At the same time, I also want to tell you that our Institute of Company Secretaries of India, uh, also provide a tailor-made insurance wherein it's a very competitive rate,
Wow.
a wide variety of insurance, whether it's a vehicle, professional indemnity, and a medical policy. So
Right.
most of them has taken. But so my question is there is anything additional after you take an insurance? Anything additional you want to guide us to have a precautionary this thing for
Yeah.
taking an insurance or a policy?
Yeah. Yes, yes. So, Sandeep ji, for me, even before investments comes later on.
Mm.
Before investments, I have three steps to be covered. First and foremost, emergency funds. Okay. Second, health insurance. Third, term insurance or a life insurance. Right? If these three aren't there at the right place, आप कितना भी investments कर लो, it's a problem. I will tell you why. Let's assume a situation where Smith has started investing at a very young age. Let's say he's investing 20,000 rupee every month. So roughly I'm investing 2.5 lakh rupees every year. For 10 years of my life, I invested 2.5 lakhs. So I've invested 20. Let's assume the value of 25 lakhs is 50 lakhs, 50, right? A very unfortunate situation comes in, like a COVID. I lose my job. At the same time, one or two members from my family are hospitalized, right? Uh, some of you might feel I'm over exaggerating, but trust me, for that 50 lakhs to go, it might take only this much time,
Yeah, everybody has experienced it during COVID.
right? Yes. So my request is we should have emergency funds so that even if my emergency comes, my planning for my actual goals aren't impacted. Or else what will happen? I will start withdrawing from my the funds from those goals. When those goals are due, I will be in a deficit.
Right.
So what I'm trying to say is have an emergency corpus. If I have to quantify that emergency funds, I say if your 1 month's expense include all your fixed expenses, rentals, EMIs, that whatever happens, you have to pay this much to run your basic life.
Are you saying the emergency fund is on the cash basis in your bank balance or in any
I will
scheme
come to
or
that. I will come to that.
okay.
So say for example, your my monthly expenses are 50,000,
Hmm.
which takes care of my some of my rents or EMIs or my groceries and basically to run my house, right? 50,000 into 6 months, 3 lakh rupees, at least 3 lakhs on a higher side, at least 1 year. So 12 months into 50,000, 6 lakh. So 3 lakh to 6 lakh is the window for emergency funds, right? Why I'm saying this? Say for example, I lose my job. My focus is I'm not stressed or worried how will I run my house.
Hmm.
I'm thinking about I have 6 months to 1 year as a window. So my energy is towards how can I get another job, right? Or else we only think about the negatives, right?
Right.
That's a human. So I'm creating a bucket or a window for myself. So this is from basic expenses. And if you have senior citizens at your place or depending on the family structure, add 3 to 5 lakhs more from health perspective. I understand you guys have health insurance from the institute. At times, the hospital will demand cash on table first before the admission,
Right.
right? In my case, 3 to 6 lakhs plus 5 lakhs. So 8 lakhs to 11 lakhs has to be a roughly emergency fund. This emergency fund, you asked where it can be in a saving. This emergency funds, 100 cannot become 99.
It
One,
should
it
be
has to be.
untouched.
Second, it has to be extremely liquid. If you click a button, it should come to you within next 24 hours. It cannot be volatile, obviously,
Hmm.
right? So it can be in your saving account. A good replacement of saving account is a liquid fund. Saving accounts give you 2.5, 3%. Liquid fund will give you 5.5, 6.5% as well. FDs, I'm okay with it, right? First is emergency funds. I hope I have cleared that.
Great.
Second is insurance. In a metro city, I need a health insurance of at least 50 lakhs. At least 50 lakhs.
Medical policy you're saying.
Health insurance, medical policy, yes.
Yes.
Non-metro, I'm comfortable with 25, 30 lakhs as well. Now, what's the trick? How can I buy a 50 lakh
Yeah.
policy at a very good premium?
Because the medical policy for even 10 lakhs will go more than 20 to 25,000 for a
Yes,
family.
you
So
are
50 lakhs,
absolutely right.
50 lakhs, I assume it will cost me more than 1 lakh or 1.5 lakh, something like that.
No. Can you see my screen?
Yes.
Okay. So these are my quotations. Okay, like at my age, I have tried to cover me and my wife.
Hmm.
Okay. So so in the first screenshot, 10 lakh policy is costing me 18,174. I am 32, my wife is 31. Okay. At this age, A 10 lakhs policy will cost you 18,174,
Hmm.
right? Now, can you see the 90 lakhs policy over here at the extreme right?
Yes. Health
The
recharge.
cost, yeah, and the cost is 1,284, right?
Okay.
There's a concept called super top-up policy. Why I'm buying 10 lakhs plus 90 lakhs and not 1 crore? I stay in Mumbai. I feel I should have 1 crore policy. Okay. I have 10 lakhs base policy. If I buy at 1 crore base policy, as you rightly said, it will cost me 50, 55, 60,000. Right? What I've done is I've bought a super top up policy which is costing me only 1,284. So in 20,000, I have 1 crore
Yearly.
cover
Yearly.
yearly. Yearly. 18,000 plus 1,200, roughly 20,000. Yearly 20,000 gives me 1 crore cover. Now, why is super top up cheap? Super top up says I will not come into picture for the first 10 lakhs. Only if your bill goes about 10 lakhs,
Then
I
you can
come in,
utilize.
right?
Yeah,
Now,
sure.
what is the probability of a hospitalization? Number one. What is the probability of hospitalization going beyond 10 lakhs? Number two.
Hmm.
Because the probability is less, the premiums are
Less.
less. Most of the advisors will not talk about super top up because if I sell you a super top up, let's be very honest, this is my business, my bread and butter. If your premiums will go down, my commissions will go down,
Go down.
I
right?
have one
So,
question. Hello.
yeah.
Sir.
Yeah,
Sandeepji,
I have one.
can we take questions in the later part?
No issue.
Venkatji, so
Sir.
I'm so sorry. Just to continue the link, be rest assured, I will take all the questions.
Okay. Let's continue.
So this way I can have a bigger policy at a lesser rate, right? There is
Understood.
something like super top up. People can check what is super top up, and obviously we can discuss later on one, or you can
We
take my.
we hear from the advisors. It's called rider. Is it called riders as well?
No, this is
That is
not a
different.
rider. See, most of the riders are add-ons, which will
Mm-hmm.
cost you more.
Mm.
If I have to give you, if I be very candid, 80% of the riders are useless.
Okay.
They are just to increase the premium.
So this super top ups will be available for every insurance policy, or is it
Not
like
all the companies are giving super top-ups. If I have to name, HDFC is giving, but a very limited one. Niva Bupa, which was earlier Max Bupa, if you can relate Max Bupa, now it is Niva Bupa. It gives a bigger top of 40 lakhs, 90 lakhs, and so on. There are few companies like Manipal, Cigna, Care who are also giving super top up,
okay? So
right?
almost the
Yeah,
uh,
you will
bigger
get
market.
good two, three companies giving super top up. The known good names.
Understood. Understood.
Yeah. And the third part is term insurance,
Right.
life insurance. If something happens to me, my family has to be secured. So if these three things are not
But
done properly,
term insurance and life insurance are both are same because people sell life insurance in a like there is an endowment plan. You have to pay this much after 5, 15 years. You will get a periodically every year. So that I feel that is a life insurance. So instead of that, I pay. I invest in mutual fund and rest amount I will invest in term insurance. So is
absolutely
both
bad.
are same or
No, life insurance. In life insurance, there are n number of different products. One of them is term plan. If you really want to protect yourself, you protect your family rather, term plan is the best product. Rest all are investment plus insurance product, where the returns are very less, but most importantly, the coverage is very less.
hmm,
If, for example, in a saving plan or an endowment plan or any LIC plan, you pay 1 lakh rupee on a yearly basis, the coverage will be 10 lakhs to 20 lakhs max. Will 10 lakhs, 20 lakhs suffice my family? I think no. By paying 1 lakh. Rather, I pay 15,000 rupees for my term plan worth of 1 crore. Right? The only plan in term plan is people feel, everyone knows in term plan I keep on paying the premiums. If nothing happens to me, my money is gone.
hmm,
Unfortunately, we can't accept that fact. How can my money go?
Right.
And that is where then the traps,
Right.
riders, then the mixing of insurance and investments.
When I'm
Trust me.
paying something, I should get something. That's
Yes,
what
yes.
people
But
think.
if you do the maths right, term plan is the best product, the cheapest of all.
Mm.
And don't mix insurance and investments. As I gave the example of 1 lakh worth of saving plan, giving you 10 to 20 lakhs of cover, rather 15,000 rupees in a term plan gives you 1 crore worth of cover. The remainder of 85,000, if I invest, that will give me 2x or 3x of what a 1 lakh rupees saving plan will give me in future.
Understood. So is there any calculation for term plan as well? For you should get a this thing for of 1 crore or 50 lakhs. Is there is any uh,
So there are
calculation
restrictions.
for that?
Anyone cannot buy a term plan. Say, for example, tomorrow I can't go and say I need a term plan of 10 crores.
Mm.
Although the premium is 1 lakh rupees, I am ready to pay 1 lakh.
Mm.
No. There are calculations at the company's level that whatever your salary is, annual salary, salaried guys will get only 20 to 25 times of your annual salary.
No, no, at an individual level, because because suppose I have a home loan worth of 50
Right.
lakhs, and if I
Right.
believe that something happens to me, then that 50 lakhs should secure by a term plan, something like that, right?
Right.
So that calculation.
Yeah. So what's the logic I will tell you? In the previous example of the case study of one of my client, I showed you 6 crore is the requirement for
Understood.
retirement. I'm investing all my years to reach that 6 crore.
Right.
Why a term plan is required? In case of early death, I did not get the opportunity to earn and save for my family. That is where a term plan is required.
Right.
So when you are in the age of 25 to 45, probably the requirement is more because your savings and investments are less.
Mm.
At the age of 55, 60, you already have 6 crores.
Right.
Now, if something happens to you, earlier that 6 crore was supposed to be used by 3 people. Now that 6 crore will be used by 2 people.
Two
More
people.
than
Right.
so in the younger age, it has to be more. So as you rightly said, education loan or home loan, whatever liabilities you have, obviously you need to cover that.
Right.
Plus my substitute. If I'm the earning member, let's say my salary is 50,000. If something happens to me, 50,000 will not come to my house.
Right.
How do I create a 50,000 substitute? The answer is 1 crore term plan. Even if my family has no knowledge about finance, they park a 1 crore FD, they get 6% interest, 6 lakh rupees divided by 12, 50,000 rupees. They created my substitute.
Mm.
So in my case, if I don't have any liabilities, 1 crore, if my salary is 50,000. But let's assume I have a home loan of 45 lakhs.
Mm.
Then technically 1 crore plus 45 lakhs. I should ideally buy 1 crore 45
Calculate
lakhs.
that. Yeah. One more
Or,
thing.
yeah, sorry, go
So,
ahead.
so one more thing with respect to the term insurance only. When the agent comes, they will like there are few options that will you pay till the age of 60 years or 75 years, or you complete within 10 years by paying a higher premium. So,
Right.
if there is any logic in that, can you?
So, Sandeep ji, I have two pointers where people end up making mistakes in term plan.
Hmm.
First and foremost is sum insured. If I ask most of the people today, do you want to buy a term plan? They are saying yes, I want to buy a term plan because they have seen a lot of awareness, ads, and all of that.
Right.
I ask them, what is the sum insured? How much do you think you need? 1 crore.
Hmm.
10 years before, that number was 50 lakhs.
Hmm.
I asked them, why 1 crore?
Hmm.
For me or for you, it can be 1 crore. Let's
Right.
assume for you it is 1 crore. For me, it is 50 lakhs.
Hmm.
For someone else, it can be 3 crores.
Right.
Depends on your lifestyle, your family dynamics, your salary, your liabilities, and so on. So we are having a blanket rule. 1 crore looks good.
Right.
इतने में तो मेरा फैमिली संभल ही जाएगा.
Right.
No, it depends on case to case basis. Please
Yes.
let's not accept or stop at 1 crores. Rather go for the higher number. Now what happens? I will give you my personal case study. 2014, My salary at that time was 35,000.
Hmm.
Okay. I could have got a policy of 2 crores. I bought a policy of 1 crore. 2018-19, after my marriage, I started to realize 1 crore is less.
Hmm.
I bought more 2 crores.
Hmm.
Now, after 2, 3 years, trust me, I know I will feel 3 crore is less.
Definitely.
I will need 5 crores.
Because your income is
Problem,
also increasing.
yes. Now, problem with term plan, unlike health insurance, is if I buy today, whatever the premium comes today will be constant throughout my policy term. Say, for example,
Hmm.
I bought a policy of 1 crore in 2014. The premium was 8,000. I am paying 8,000 till my age of, let's say, 65.
Hmm.
Now I bought a same 1 crore policy again in 2019. After
Hmm.
5 years, I
Hmm.
have grown by 5 years.
Hmm.
My probability of death has increased.
Right.
For the same 1 crore policy, now I am paying 14,000 rupees every year.
So you are paying 8,000 plus 14,000. Or?
Yes,
Yes. Okay.
8,000 plus 14,000.
Okay.
My point is, had I took that policy in 2014 of 2 crores, my premium would have been somewhere around 15,000, let's assume.
Right.
So 15,000, but I am paying 23, 24,000 now. Right?
So what you are
So
trying to say, nothing is enough, and you can at early stage if you start, go with a higher premium.
yes, because you will save on the premiums.
Right.
In health insurance, as it is, as the age grows, your premium will grow.
Right.
But that is not the case in term plan.
What about the term then, tenure?
Yes. Now coming to my second point, the second issue which I have, selection of term. People select that I want a policy which will last till 85 or nowadays 99.
Hmm.
Now tell me one thing, probability of death till 99. What do you think? What is the probability of my death till 99? Can I say 100%?
No.
Almost 100%, right?
Ah, right,
Probably
right. Um,
I will be, let's assume I am not going to live beyond 99. That
right.
means it is certain I am going to die before 99. The probability of death is 100%.
100%.
What is the probability of my death till my 65?
Mm,
30, 35%?
30%, yes.
Or let's assume 40, 45, whatever, right? In the
Hmm.
range of 30 to 50%. Premiums are dependent
Hmm.
basis one factor, probability of death. Because my probability of death till 99 is high, my premiums are high, and my probability of death till 65 is low, and hence my premiums are low.
Right.
But I still prefer a 99 saying, मेरा premium वसूल होएगा, I will die and my family will get something.
Right.
Right? Let's again come back to the previous case study of that client of mine. If something happens to her before 50,
Hmm.
she is not having 6 crores, hence she needs a term plan.
Right.
After 60, let's assume something happens to me at 62.
Right.
I have an asset of 6 crore.
Right.
There are three factors. One, my family will not be dependent on me, assuming my kids are 25, 30
Right.
plus,
They
everyone
will
is
also
in.
earning. Hmm.
Second, I have the required corpus.
Hmm.
So, term plan is required, as I said, in the case of early deaths. I did not get the chance to save and keep for my family. That is where term plan will come into picture. So if something happens to me at 35, 40, 45, I should have a term plan. If
Right.
something happens to me at
After
61,
60,
I'm not earning. My
right.
family is not dependent on me. Financially, there is no change in our life. I'm not talking about the emotional part. I'm talking about the
Hmm.
financial part.
Hmm.
Financially, there is no change in our life. So term plans are only required till the time you generate the corpus. Once you have the corpus, term plans are not required.
Right.
And then obviously because family has moved on, they are now,
Right.
taking themselves, they
Understood.
are independent, and I am not earning. So as it is, even if I don't have a term plan, let's assume I don't have a corpus. Smith doesn't have a corpus at the age of 60,
Hmm.
and he is not earning from 61.
Hmm.
At 62, if something happens to me, will it impact my kids?
Hmm. Probably no.
Because as it is, I was not earning.
Yes.
Right. So yeah. So to answer that question, I personally feel 60 is the right age to have a policy. Your premiums will go down significantly. And again, the remainder, the extra surplus premium which you are paying till 85 or 99, invest that.
Hmm.
If you are worried that my money will go, your money will not go, because whatever you have invested
Yeah,
will
it is
again
compounding.
5 times more than what you have
Right.
paid.
Understood.
Yeah.
So we understood the term should be maybe 60 or 65,
Right.
and also there is a the agents come and say that, "Okay, you close it within 10 years. The premium amount you pay within 10 years."
Yeah,
So
yeah,
is,
yeah.
is this the right thing to do?
I personally feel it is not the right thing.
Hmm,
I will give you an example why. Say, for example, I am 30 years of age. I am buying a policy till 60. I have to pay my policies for the next 30 years. And let's assume I am paying for the next 30 years.
hmm,
I am paying 100 rupees every year
hmm.
for the next 30 years. So I am paying 3000 rupees. Now there's a different scenario where someone says, let's do one thing.
Hmm,
Let's pay only for the next 10 years.
hmm,
My premium will double. It will be 200 rupees.
hmm, hmm.
But 10 years into 200 is 2000.
Right.
In absolute terms, I am paying less in 10 years. I am only paying 2000. But if I pay till the end, I am paying 3000.
Hmm,
But once I pay that 200 rupees every year, that extra 100 is with the company.
right.
Company is earning interest on it. So that 2000 and that 3000 on cash flow, time-wise cash flow basis are same. That means because company took the money early, they are taking less. Because they will earn from that, they will earn interest.
Right.
If
Right.
I keep that money with me in my
And you
bank,
invest
I
the
will
same
also earn
amount.
interest.
Yeah, invest the same
But
amount. But I
but
have one logic here.
Yeah,
Sir, 1 minute. I have one logic here. Like if I pay every year till the age of 60, I know that I have a term insurance and my family also know. The moment if I close it within 10 years, remaining the very next 2 years, I don't even know whether I have a term insurance. I will forget it. Right.
absolutely fair
So
point.
that,
no, no, I have one point, Mr. Smith.
Smith,
See, the
Yes,
10-year
sir.
policies is basically when you are engaged, your earning capacity is more and the spending
sir,
capacity
your
also
voice is
increase.
bit low. Can you come
My
near to
voice.
the, yeah,
Yeah, yeah.
come here.
Hello, am I audible?
Yes, perfectly
You're
fair.
audible.
Yeah. What I'm saying is there are policies which you have to keep paying your premium for till let us say 70 years or 8 years annual premium.
Uh,
But there are 1 minute, Ramana. There are policies where you pay premium for 10 years and get a coverage of let us say up to your 80th year. So where I see so the challenge of paying premium maybe it's double easy when you are earning. So once your earning stops, once you retire at the age of let us say 60, so I
Right.
don't have an obligations of paying premium, and my earning
Right.
capacity also will come down, but I have been covered
Right.
for till 80 or 85 or 90 years. So what way see in terms of capability, in terms of
Yeah.
uh, paying obligation, if it is
Yeah.
continued till 80 years versus only for 10 years.
I'll answer that question. So one is, as I said, I believe the policy should be only till 60, 65. So I'm not worried till 80.
But you say
Second,
okay. You saying 65? This policy, term policy, 65 is enough. That's what your session.
yes.
Okay.
So the logic. So okay, now moving ahead, and then I'll come to the logic again. Moving ahead, as it is, we are earning till 60, right?
True. True.
So if my tenure is 65, I have to take care only of the last 5 years.
True.
And because the premiums are low, so in my case, the premiums are 25,000. Trust me, when I turn 61, 25,000 will be like 2,500. So even if I'm not earning, it will not be a burden on me,
Okay.
right? And still, good that you brought this up. Even if I buy a policy till 65 or 70, let's do one thing. Let's not end the premium payments by 10 years. Let's pay till 60, till the working age. If someone says, Smith, I only want to work till 50, finish the premiums till 50. Now, because we all are salaried, I'm saying this. If my client is a business person, then I say, yes, end up the premiums in next 10 years. Because business is very dynamic, there are a lot of new
Yeah.
businesses coming in. I have a risk, my business might go down. I don't want that pressure. Now I know my business is doing well. Let's finish it off. But in salary, I'm okay. I know I'm going to earn till 60.
Yeah. So it varies between salaried employee versus businessman.
Yeah, it varies between, yeah. And it varies from case to case. Everything in finance, unfortunately, fortunately, varies from client to client. It is very
Right.
dynamic. So obviously, your advisor will be in a better position. But as I said, now coming to the first point, I believe we should not have policies till 80, 85.
Oh. Okay. Okay. Good. Good. Yeah.
Yeah.
Proceed, Sally.
I think someone else, I think Venkat sir had a question.
Ramna is moving in the car. Right. Yeah. Proceed. I think you will come back. Sandeep, you proceed. You're
Sandeep,
muted.
you are on,
Sandeep, you are muted.
Sandeep, you are on mute.
Unmute.
So with this segment, I understand that you told term insurance should be a must and medical policy of a higher coverage.
Higher coverage, and I have given the technique. Super top up is the way to reduce premium.
Right. And a super top up. Yes.
Yeah. For me, 1300 rupees a year, 100 rupees a month is giving me 90 lakhs of safety net.
Right.
Now, 100
Yeah.
rupees, we spend more than 100 rupees in a movie or a popcorn.
So
I
in
also
health,
encountered. Yes.
yeah, in health policies nowadays, no claim bonus. In terms of no claim bonus, they're adding the premium amount. Sorry, what is called sum assured amount.
Some insured, yes.
Some assured what. So how does that they work? Really, is it like see in one of the policy, they added almost 50% of the sum assured. Taken a policy of 50 lakhs, there is no claim. They're adding 25 lakhs to the base sum assured and making the
Yes.
health coverage of
That is
22
true.
to
Lot of new modern policies, even at 100%.
500%.
100%. Yeah.
No, I've seen a policy where if
Yeah.
there is no claim for 5 years, at the end of fifth year they're adding 500%.
That's true. That's true.
So how they're really advisable such kind of policies?
Yeah, absolutely. Nowadays, so Sandeep ji, one thing which you mentioned is the institute also has policies for everyone, right?
Right.
One thing which I will request is also check which companies they are. I assume most of
NIA.
the
NIA. NIA
national
Oriental.
Oriental and so
Indian
most
Assurance.
of these are, I say these are traditional companies,
Right.
right? Modern companies or modern policies will have such feature because we are talking about features and I know we are going above the time, but last one thing which I'll add is one of the feature is, as I said, health insurance premium increases
Right.
every year or rather at a age bucket. Say for example, 25 to 30, the premium is 100, 31 to 35, the premium will increase to 115 and so on. One policy says till the time you don't claim, you pay the premium of the age where you entered.
Hmm.
So if I buy the policy at 25, if I don't claim till 45, I still the premium which a 25-year-old will pay. Right? So modern policies are way ahead of the group insurance policies.
Traditional. Yeah.
Most of the institutes or groups will take policies from traditional policy providers because they are cheap. Let's be honest, that is how it can be done. So these benefits. Now, one more problem is room rent.
Hmm. Yes. I
In those
recently encountered
policies,
that.
joint sharing room or maybe a not a premium room is allowed.
They calculate
Now,
1% of the total premium.
1% of the sum insured.
Sum
So if
insured,
you
yes.
5 lakh rupees, 5,000 का room rent का limit लग गया.
Right. Right.
Now, modern day policies say even if you want to stay in a deluxe suite, we are okay. Right? So, obviously, we are dependent on these group policies, fair enough. For higher age, for my senior citizen parents, consider these policies because
Hmm.
those policies are expensive.
Hmm.
But for us, if possible, have a modern day policy.
Understood.
Be dependent on your group policy, but have a
So,
smaller
so you are
independent.
saying you should have two insurances.
Yeah.
So,
One question I have.
Yeah.
See, there are certain health insurance companies, what they say, they have third party TPA or the in-house TPA. What will be the impact and difference in terms of the claim disbursements?
Nothing honestly changes much. It is very easy. And in next 1 or 2 years, things will be very easy. Today also we have cashless claims and we have reimbursement also is submitted online, right? In next 1 or 2 years, everything will be integrated. So be it a third party TPA or the company's own TPA, doesn't matter much. That point will not matter much.
Because one experience we have is that since third party TPA, the third parties always try to how to reject the claim. They will see the reasons or loopholes to reject how they can reject the claim.
sir, our ICSI TPA is very good because recently I have encountered it,
No,
and
ICSI
immediately.
it will not be
Uh,
like that, Sandeep.
mm,
The
mm.
TPA will be insurance company will have a third party TPA agreement where
Yeah,
their
yeah.
claims will be
Even NIA has a TPA, na?
verified by the TPA.
Mm.
Otherwise, in-house TPA claims are going fast. And one more thing, sir, I want to just check
Yeah.
whether it is good. Even we have a good amount of health insurance, like 1 crore, no, 1.5 crore. Whether
Uh-huh.
it is better to go and say to the hospital by the admission that we will go for cashless, or it is better to go for reimbursement. Which one is better to choose?
If you have the option, always go for cashless.
Yes.
Most of the hospitals, there
Mm.
can be a possibility that your hospital is not in the network of the company of health insurance you have. In that case, unfortunately, we go for reimbursement. If I have the option, I definitely go for
Definitely.
cashless.
Yes.
Why should I pay 10 lakhs first and then go for reimbursement?
And later on, that will be subject to the scrutiny as well.
Yes.
We don't
So
know.
always go for cashless.
Yes. So
And
moving
the
on to
super
the
top
next.
up and the super top up case, is it better to go for completely different insurance provider, or even a similar insurance provider, same insurance
Very valid
provider
and a
can
very
also
good
give top up?
question. A good question. I will always prefer top up, super top up to be of the same company where my base is.
Okay, but is
Or
it
else you
possible
have
to
to,
go for a super top up with another company?
it is completely okay.
Oh, okay.
See, so what
No, no,
happens in this
people.
case of 10 lakhs plus 90 lakhs, the example which I gave, let's assume I don't have this 10 lakhs policy. Now the bill has gone beyond 10 lakhs, right? Let's assume 25 lakhs. So 15 lakhs, this super top up will pay. Super top up will not ask how did you manage the first 10 lakhs, whether you
Mm.
managed from some base policy, whether you paid from your pocket or from some other company. That is none of their business. But if we have from the same company, my claims becomes easy.
Easy.
Or else, if I have base policy in HDFC, I submit all the documents in HDFC. If I have super top up in say Niva Bupa, I submit all the documents again in
Yeah.
Niva Bupa.
Process will be twice.
Yeah. So I
It's,
prefer having it in the same company. Having said that, there can be cases where the client is having 15, 20-year-old policy and is not willing to change. But that company is not providing super top up, or I don't want to, I want to continue with the benefits of 15, 20 years, then I might end up taking a super top up somewhere else as well.
understood. Sir,
Yeah.
we'll move on to the next segment. This is with respect to professional indemnity insurance.
Yeah. Yeah.
And I believe the professionals like company secretary and chartered accountants, they should have this policy. And even
Absolutely.
ICSI, I have sent it to you. ICSI also offers us professional indemnity from Oriental Insurance. So
Right. Right.
how this works, and also if there are any professionals who have already taken this kind of insurance, uh, yeah, I ask me suggest any suggestion from them.
Yeah. So one is definitely you should have this insurance. Okay. Nowadays, see, earlier things were different. Now, in these modern days, technology is everything. It is
Right.
very easy for me to sue my CA or my CS, right?
Mm.
Uh,
Right.
And it is easy. I will threaten you. I will put it on Instagram. I will have social media stuff and all of that. So, uh, thank you so much. I think Rashida ma'am has to leave. Thank you so much, Rashida ma'am, for attending it till now.
No, no, my pleasure. Thank you so much. I'm sorry I have another call, so I'll just log off.
No
Thank
worries.
you.
No worries. Thank you so much. Yeah. Yeah. So continuing with this indemnity thing, definitely we should have it because see nowadays it is important. It is really easy to lodge a complaint, right? And in because it is so complex now that as a CS, I might end up making a mistake. I'm not making it intentionally,
Hmm.
right? But my client can sue me for that, right? And the costs when it comes to lawsuit or preparing myself to protect my reputation are very high.
Right.
And at times, forget about client. Client is okay and is very accepting that, okay, I understand it's a mistake from your end.
Hmm.
But this mistake of yours has costed me 25 lakhs or 5 lakhs or whatever the amount is. Obviously, say I respect you. I have that 15-year relationship with you. I'm not objecting or I'm not saying I'm going from
Hmm.
tomorrow.
Hmm.
I am your client, still I'm your client. But who takes care of this liability or loss?
Right.
So this insurances will protect us from such knee jerks is what I will say.
Understood.
Right. So every professional should definitely have and we should understand what is the cost. The
Hmm.
cost is very less, right?
Hmm. Right.
If I get a better sleep by paying 500,000 rupees a month, what do you want?
Right.
Yeah.
So we will move on to the our last segment, that is practical tools and habits. So
Yeah.
you would like to suggest any tools or any tips and tricks to do a better financial planning and structure wise?
Absolutely. So this is something which is very close to my heart and it's a request to everyone. Okay. I have seen this. People doing everything right. They have the right investments. They have the right insurances. Everything is right. Still they struggle. Okay, I will give you a very real case study of my neighbor, next door neighbor. Okay, a family of four, uncle, auntie, and two daughters. We lost uncle at the age of 60 when he was 66. This is about I'm talking about 2022.
Hmm.
Now I say that uncle got a warning as well. Uncle was diagnosed with blood cancer in 2019. Okay, which
Hmm.
a lot of us didn't knew. We knew it later on, but he and obviously the family members knew. Now he had everything right,
Hmm. Hmm.
but he never discussed anything with his wife or two daughters.
Hmm. Hmm.
After we lost him, we used to open his drawer and the stuff where he used to keep all the documents. We see a document called SBI Life Insurance. Let's go to SBI Life Insurance. We find a document HDFC Mutual Fund. Let's go to HDFC Mutual Fund. Till date, I am not sure, or rather, me and those two daughters, we three are not sure. Did we took care of everything? We don't know.
Hmm.
So, Sandeep ji, I have prepared a document. I'll share that with you. It's an editable PDF. My request to each and everyone is that document you can edit online and then take a printout. You can note down everything right from your driving license number, your PPF, PF, DMAT, mutual funds, post office, your school, their daughters or children's school emergency number, kids emergency number, any other maids, all of those numbers, but more importantly, your financial advisor, your health insurance advisor, life insurance advisor, keep their numbers, names over there. Let's assume I have a health insurance policy and my agent is Mr. Sandeep, right? I have a heart attack. I am sitting or rather lying on the bed in hospital. Sandeep ji is, very good. But I talk with Sandeep ji every day. But my wife is not aware about who Sandeep ji is.
Hmm.
Whom will she call? Right? So it is very important that you note down these numbers, the names, discuss this with family. So two simple tricks. One, first update this complete file and make sure everyone is aware about it. Discuss in a quarter one lunch or dinner, we should
in this
discuss this
form.
with our family members. You know what? I have renewed this. I have
Mm.
not renewed this for so and so reason. I have moved this policy from this advisor to this advisor, and so on.
This
Right?
is very much required because I believe most of the people don't discuss with their spouses, and I also seen one data where lots of amount has been unclaimed because of there is no one to claim that money. So,
Sandeep
Yeah.
ji,
so the
if
Even
I say the
Sandeep,
number of unclaimed investments, I
mm,
don't know how much zeros are there in that number.
mm,
even Sandeep, three
mm,
important things where who are in the middle age
mm,
to have either first one will to be prepared and the nomination of all accounts, nomination for all your bank accounts, all other investments, whether it is properly registered or not, that is also most important.
okay.
Right. Yeah.
So
But
ca- can
nowadays,
you can sir
thanks to
can
the
you share
systems,
that PDF document? Is it readily available with you or how?
I will just check. I will just check. In the
Okay.
meanwhile,
Just
okay,
share it to us so that I can share it to all the viewers. So,
I will definitely share it with you right away, like in next
mm,
5 7 minutes.
okay. Okay.
Right now, my request is also invite your advisors, whoever the advisors are, at least once, if possible, at your residence. If it is not possible because of geographically, like your advisor is in far away different state, have such Zoom call meetings. Ask your younger kids or elder parents to see the face of who your advisor is.
Mm,
If something has happened to me, I am no more. Sandeep ji is my advisor. He's so generous. He came down to my residence
mm,
and said, "You know what? I am his advisor. I will help you with all the claims and everything. You need to help me with these important documents, Aadhaar card, PAN card, and a cancelled check, and give me signatures over here so that whatever policies Smith had will come to your account." Will my wife, will my younger kids, or my elder parents, they are already in trauma.
right.
Let's try to assume what the situation is. They are already in trauma because they have lost someone very young. Will they trust Sandeep ji? Even if he's an honest person,
Mm,
they will not.
yeah.
So show the advisor's face, call him at your residence. If not, do a Zoom call.
So
And
nowadays
yeah,
what happens? Most of the people who are investing in mutual funds, they sometimes they invest directly. So they want to save some money, and they were like, not to why I should give it to the broker or the dealer. Instead of that,
right,
I will invest directly. So what do you
right.
suggest? So from this, I came to know, okay, you should have a in-person financial advisor, not online
Yeah.
uh,
Yeah. I will give you
investment.
three tips in the end once I close. Let me complete the last part. Do you have 2 3 minutes or we need to
Yeah, yeah,
close it?
definitely we have.
Yeah. So regarding this, the document which I'm talking about, my humble request is once you update it, what I have seen is I have given this document to people. People take a print out of it and keep it in the locker.
Mm,
What I have kept from my hands in the locker 5 years back, I don't remember.
mm,
Right? My humble request is take a printout, keep it below the shelf, below your television shelf. Why? That is a place where everyone keeps their TV remote or something. Everyone accesses that place regularly. You're dusting, you do a lot of dusting and cleaning, so you will again and again see. My subconscious mind should know there is some important document there. Even if I am suffering from a heart attack, the ambulance guys are taking me down from my lift, and my wife is also going in the ambulance. She should recollect there is some important document there. Let me just quickly take it and put it in the bag.
mm.
If it is in the locker room, that is not possible.
So even though if she is in hospital, she can tell someone that "Ki, it is lying there only. Instead of if
Absolutely.
it is a locker, she has to come. So
Absolutely. And English,
that's a very good trick.
and locker, the problem is, let's assume my mom is at my house and she will call my mom and say there is something important in locker and you get it.
Mm,
My problem is she will not remember that there is something important in that locker
mm,
because we have not seen it on daily basis. Na? If you
right.
see your AC car remote on daily basis on that table, unconscious, even if there are no lights, you know where your AC car remote is.
Otherwise, you
Because
can take two, three copies. One you keep it there, and one you keep it in. in the locker, or you
Absolutely.
can give it to your spouse wherever you want to keep. So
I don't
you're
mind.
saying that this need to be updated in every year, or how is it?
The practice which I follow is most of us do a lot of cleaning in Diwali.
Right,
I do this cleaning in Diwali
right,
before Diwali. I
right.
edit my editing and updations happens every time before Diwali,
Mm,
and I renew and I do all of that. So what I do is as a practice in at my place we have a puja during Diwali, and this is an important document. I keep my laptop as well in that puja, right? I
mm.
keep this document as well. Again, let people see, let my mom see, let my wife see. They will register
Subconsciously,
it.
everybody will recollect. Yes.
My
Actually, digitization will be the better idea. Everybody will have handy in mobile whatever documents relating to at least health insurance and terminal insurance.
right. My only problem is in mobile, you have so much data,
Mm,
you might end up losing it. So obviously, you should have a drive. You click to my clients whenever we buy new health insurance, life insurance. We have an onboarding process where one of my team member calls them and says, in easy subject line, life insurance Smith Shah, health
mm.
insurance Smith Shah has to be the subject line, and mail it to your one or two close friend and your siblings, not your parents. I'm assuming your parents might not be there at that age,
Mm.
but your younger siblings will be there at their age. So mail it to them. If I don't know how much comfortable you are, if you are comfortable, share it on a drive with two, three people,
Right.
Google Drive.
But make it a
But
habit every year and
yeah,
fix a time or fix a date,
yes,
specific
yes.
date.
But I personally still prefer having something mentioned physically. See, the problem, once I know I have a policy in this company, I will figure it out. Problem is if I don't know.
Hmm.
Yeah. And in last, so three tips,
So you were
three tips
telling some three tips
is
you were be sharing.
everyone, everyone is first and foremost, which the point which you mentioned, Sandeep ji, that have an advisor, right? I say, please outsource.
Okay.
Okay. Why I say this? My wife is a CA. She's into audit.
Hmm.
I understand a lot of audit stuff because after 2020, COVID, work from home, and all of that. And I also have studied a bit of that. I am into mutual funds and personal finance and insurances and all of that. She understands most of that as well, right? I understand a lot of CS related work as well, okay, because of my background and finance related domain and all of that. Can I replace Sandeep from tomorrow in at R&A Associates?
Hmm.
The answer is no. Can Sandeep ji replace Smit Shah at Money Mentors? The answer is no. I'm not saying that you don't have the relevant information. You might have everything relevant, right? There are some stuff in bits and pieces which only you know because of your expertise.
Right.
Trust them. How we outsource everything. हर चीज के लिए doctor. If I'm not well, I will go to doctor. This is something which we need to accept. Specifically, Sandeep ji, I'm focusing on this because we are from the finance domain.
Right.
I have seen this is a problem. If I am from finance, I feel
I
मुझे
will do
सब
it by
आता है.
own. Ah.
I will do it. It's no rocket science. I will watch two, three YouTube videos, Instagram videos. I'll find something on these schemes and I will do it by myself. That's not the way it looks, right? And most importantly, forget the technical part. So this was the technical part.
Hmm.
The second part is the emotional and the behavioral part.
Hmm.
I will give you my example. If we meet, I will show you my portfolio as well. My portfolio is not with me.
Hmm.
It's with another advisor. Why? Ideally, I'm managing my wife's portfolio. Again, that is also wrong. I should not do it, but somehow it is that way. Why? Because in our case, I will take decisions emotionally. Na?
Right.
Have you heard about this? A well-known doctor who
Hmm.
has done 1,000+ surgeries, खुद के फैमिली में एक प्रॉब्लम आया, but he's not
Punarvas
doing
here.
surgery of his son. Is technicality a problem? No.
No. You will get nervous.
Because then I think from here, from my
Hmm.
heart,
Hmm.
emotions come into picture. And in finance, in general, emotions are a bigger problem. Forget about these things.
At the
So
same time, if you have a financial advisor, he will also call you and periodically he will ask you to increase, or this is not working, you can change it or something like that, right?
Absolutely. It's like a gym trainer. You know what needs to be done. You need to walk, you need to run, you need to jog, you need to pick the dumbbells in this shape. Everything you know. But can you do it? No, and hence you have a gym trainer. Likewise.
Right.
Second suggestion is start today.
Hmm.
I know a lot of people, हाँ मैं बाद में करूंगा, ये हो जाएगा ना फिर मैं करूंगा. Once I achieve this, then I will do it.
Hmm.
My first saving or investment was of 500 rupees in 2012.
Hmm.
Right? I don't mind what the amount is, start today. And the third and the
Okay.
last suggestion is make a plan. If you just start a 500 rupees investment, it doesn't help.
Right.
Make a plan. Let your plan show you should invest 1 lakh, but you only start with 500. I'm okay.
Right.
But make a plan, and if possible, review it at interval of 1 year. But don't change your plan basis the recent performance or anything. Don't change your
I
plans.
believe everybody has planned, everybody is invested. The third one may be replaced to you have a goal set, make a
Yeah,
goal, right?
that's
That's
the
what
plan.
we
Yeah.
discussed. Yeah.
So I think that is from my side, Sandeep ji. And
Right.
if anyone has any concerns, queries, questions, we'll take it in the next 2-3 minutes. But in general, if anyone has questions, you can later on give my number. For
Definitely.
second opinion, suggestion, feel free to reach out to me anytime.
Somebody has already asked. I will share your number to
Sure,
them.
sure, sure.
So
Shall I put my number in the chat box?
yeah,
Or you will?
definitely. Please.
Your number in chat box. So if somebody wants to associate
Sir,
and take
come
your
closer,
advice
na?
along,
Your voice is somewhere.
yeah. Somebody want to take your advices, maybe outsource you, or want to take you as an what you call
Financial advisor.
advisor. So how does that go? You take up on a case to case basis in individual cases.
Yeah. So what we do is I am a financial distributor. Okay. So I can't charge from the clients. But as I said, I get commissions from insurance companies or mutuals, whatever the investment or whatever the product is, I get commissions, right? So I don't charge anything to client. We do a 360-degree, and I try to suggest from my end what I feel we should do and what we should do as a priority. And yeah, then we execute it, and that's how my revenue model is. So because these commissions in mutual funds, the commissions are 0.6%. Because it is so low, at times advisors charge fees as well.
Mm.
But ethically, we are told either you charge fees or you take commissions. You can't do both. Right. So there can be case where you might end up saying he's charging you commission, he's charging you fees, and at the same time he's taking commission as well. So that I think you can stop. Yeah.
There is a term called PMS also, right? Where your portfolio is more than 1 crore, then you
50 lakhs. Yeah.
50 lakhs.
Yeah.
If your
I will
portfolio is
not
more than
prefer
50,
PMS. I will not prefer PMS.
okay. Okay.
There's a one more product called AIF, which is 1 crore plus. That's still a better product as compared to mutual funds. In PMS, because of taxation, uh, see, investment cycle and everything for mutual fund and PMS is same, but taxation in PMS is very bad. But it is just that, people feel good, HNIs feel good, mutual funds, everyone is doing. I am a, elite investor, I am doing PMS.
Mm.
So that's how this product has been come up. But go for AIF if you want to. Rest mutual fund is better than PMS.
Anyone else have any questions? You can feel free to ask the question.
Or else if you can put it on the chat box, it helps. So, okay.
Yeah.
How about government schemes? Yes, government schemes are good. The returns are fixed and guaranteed and hence less, right? So some portion of our portfolio can be there. So example, PPF will generate somewhere around 7.5%, Sukanya Samruddhi 7.5%. Unfortunately, fortunately, these schemes are not beating inflation. Or
At the
rather,
same
just
time, there is a lock-in also, right? Higher lock-in period
lock-in
will
of
be
10,
there.
PPF 15 years.
So is it
So if you are
suggestible?
ready to lock your money for 15 years,
Uh,
in equity, you will generate much more. So if you are not beating inflation, at the same time, you are generating lesser returns. So short term are good.
Sir, one more question. In SIP and SWP, which one is the better, and how we can choose that? SIP or SWP, we have to go for it when we have sufficient amount of funds with us.
I will answer it in 30 seconds. The rest we can have it on one-on-one basis. SIP, I am investing on monthly basis. So in the first case study of my client, 6 crores accumulation for retirement, I am investing 25-30,000 every month to reach 6 crores. That is SIP. I am investing every month. Once I reach 6 crores, I will move it to SWP. SIP is systematic investment plan. I invest every month. Systematic withdrawal plan, SWP. I am withdrawing every month. Once I have that 6 crore corpus, I put it somewhere in some funds and I withdraw every month.
So we will plow it back again to SIP, whatever, because we don't need that money. After we got 6 crores, we have put in SWP, and some monthly we will get return. If we don't need really, whether it is again going back to SIP is
We
better,
can
or
again go
putting
back
in
to SIP, or
insurance.
else we can stop that. We can limit the SWP. We will reduce the SWP amount.
Okay. Okay.
Okay, sir. Then I think we can conclude this. Thank you, because the whole session was like an interactive session, and there were questions. I believe most of the questions with respect to the financial planning and insurance and security has been addressed.
Yeah.
So thank you very much, Smith sir, for valuable and insightful session,
Thank you, my
making
pleasure.
us and I wait for that document.
I
Share
am
it
just
to all of you.
attaching the document. You should get it in the next 2-3 minutes. Yeah.
Not only that, Mr. Smith, you can share
Yeah.
service
Sandeep, you can put it in the group.
Definitely, sir.
And
you can share your
and will or any other documents. I have one copy of will format. I will put it in the group.
Please, sir.
Yeah.
Ramakrishna sir, you are telling something.
Yeah. What I'm saying, your service document, what are services you provide, maybe you can share us in case you have with your coordinate, and we will keep in our network. So whoever wants to avail, maybe approach you, they can do that.
Sure. What I will do is I will share my my visiting card with Sandeep ji on WhatsApp, so that if someone wants to, he can share it with you guys. Yeah. So basically, we are into personal finance.
Maybe I will talk to you on offline, one-on-one. I would like to.
Sorry, sir, I did not get you.
So I will talk to you offline.
Sure.
Yeah, we need your contact so that we can one-to-one discuss on certain things.
I have shared it on the chat box. Also, Sandeep ji is there. He will also help, but I am again
Definitely.
sharing it in the box.
Oh, okay, sir. Then thank you
Yeah.
very much. Then with this,
Thank you so much, Ramakrishna ji. Thank you so much, Sandeep ji. It was really a pleasure, and I've heard a lot about R&A from Anita. My LLP registrations and everything is with Anita, and thank you so much. I know the ethics and how R&A functions, and I completely relate. And it was a pleasure to have this session. Thank you.
So we have lot of younger staff who want to come and build their career. So I think this kind of unique advisors will definitely help them to build their
More than happy to come down again and have any session. If you want at Hyderabad office, we can do it physically.
we should
Apart
meet in
from it,
person once.
this was a very brief session. Now I can talk for 24 hours on finance.
keep it.
So if
Maybe
you want to focus on any topics, we can have multiple sessions after 3, 4, 6 months and so on.
Definitely.
we will only request that. No.
Thank you, Sandeep. Thank you, Ramki. Thank you, madam.
Thank you, sir.
But I'm saying we'll only request you. So anybody coming from R&A, try and see that, give a special attention to them, and so that they'll get benefited.
Be rest assured, that is 100. So in general, Anita has referred, and no doubt about it, be it anyone coming from anywhere, and be rest assured about it, 100%. Yeah. Thank you so much. Thank you so much.
Okay, sir. Thank you.